All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. As you can probably hear, my voice is not fully back at all. It is a lot better than what it was Thursday, Friday, Saturday, even yesterday. But yeah, not been a fun ride. I do want to thank all you for the well wishes. Michelle has forwarded me over many of them that have come in to support. So thank you very much. I do appreciate that. I have not, I've dealt with my voice going out for a day or something like that here and there. But yeah, something like this is, have not dealt with before. And yeah, not out of the woods yet, but going in the right direction. I did want to jump on here this morning and go take a look at a few things here in the market. But also give you just a quick update of what's going on with here with me and my voice. This picture here, this is where I live, and it's a nice picture, and this is a nice road, and unfortunately in this picture you can't see my house. This whole area is not a lake. That's not what this is. This is normally where you see houses and roads and stores and civilization. But this is what happens here in Utah in the winter. It's a beautiful area, most times of the year. But when we get into what is referred to as inversion season, it gets very nasty. And what happens is the temperature switch and essentially the smog, the pollution is trapped. And it is all trapped down, right down to the ground. And it's in some days it's almost like you go outside and you feel like you've got your head on a tailpipe of a car, and that's what this is. And we had a really heavy inversion set in around Thanksgiving, and it has filled up the hospitals, it has filled up the doctor's offices with people in respiratory problems. It is responsible for deaths in the area, as it is each and every year. And it's something that we know is coming. And most years, we as a family, we take precautions and have some extra routines and things that we do, and we'll stay indoors on a lot of the heavier inversion days. But this year that stuff has not quite worked out, and anyway, I end up with a viral infection, and the product of which has swollen my throat completely shut, to the point where Thursday, Friday, Saturday, I could not eat or drink. It was very difficult even getting liquid in me. So something where, on the other side, able to, eat and drink now, get stuff, but still trying to clear out everything, and yeah, all that fun stuff. Unfortunately, my wife and daughter are both going through a little bit of it here as well. So anyway, I appreciate the well wishes, but that's essentially what's going on, and what you're hearing in my voice right now. I often say to my wife and daughter, every November, all right, time to go to San Diego till April, and they just roll their eyes at me because that's not realistic with our lives, but it's just one of those where beautiful place that we live until we get the inversion. But I guess everywhere has something that has an issue. So anyway, I the market. All right, market's open fairly flat here this morning, up about a point and a half right here. We had a big upward gap on Friday due to the jobs report, and we had looked on Thursday at the trading economics and the normal range for the jobs report, and kind of what has been going on. And let me come back here to it, but let's come in here to labor. Let's just come in here to the U.S. It'll be a little quicker to find. There we go. There we go. Non-farm payroll. And we took a look at this chart over the last 10 years and noted that, over the course of this year, 200,000's been kind of the norm, but it's been 200,000 and below. We haven't had, this kind of 2018 area where we get this pop up above 200,000. And that's what we saw on Friday. It was a nice pop up there above 200,000. And that's a significant number. That is a very significant number in terms of, changing some of the economic sentiments that are out there, in terms of, combating some of the weakening that we have seen in some of the manufacturing, and, gives a lot of credence to the green shoots ideas that are out there in the market. And so it's a very strong number, here associated with with the jobs report on Friday. And so what did we see? Well, we saw the market essentially erase the loss that it had, these kind of 2-day, skies falling with China loss, and, snap back up to the new highs here. We have not seen the market internal snap back in the same way. They have snapped back some, but not to the same degree. If you look at something like the bullish percent index, it went up on Friday, but, one of the first times where we saw the market, near a new high, and the bullish percent index didn't eclipse even the high from the week prior there. And so, just seeing a little bit of erosion continuing in the market internals. We did see things like the number of stocks trading above the 7-day moving average, which really weakened last week, make a big pop on Thursday, Friday. Just a big move in the number of stocks that push back above that key level. So a very kind of heavy mass migration here for the bulls there. And a significant number, 382 here out of 500, trading above the 7. That's a very healthy number there. And coming off of what the lows that it saw last week, were a very fast, sharp move, which tends to be more bullish than bearish there. So, we've seen that go on over the weekend. Not a whole lot of catalyst here for the markets. We just not a lot of trade war talk, not a lot of even analyst stuff. Some of the same old debate of Santa Claus and all that kind of stuff. We did see bonds, strengthen globally a little bit, but not to a massive degree. We saw oil, sell off overnight, but not to a, absolute massive degree. And in fact, it's getting bought up here a little bit this morning. So just not a high degree of change on things. In fact, oil is now turned green here this morning. So it's it's one where I look at the market this morning, and I don't think we can look and say, well, something's different from Monday or anything, or from Friday or anything of that nature. I do think there's a very key level that has come in here on Friday, and one for the bulls and the bears to both keep track of. If you're bullish, right? If you're bullish, it's a buy off of Friday's open level. And what do I mean? Well, the S&P level on Friday's open was right here, 31.39. And if you want to be a buyer, you're buying off of 31.39 and running. And running confident, running strong, and saying, hey, as long as that level holds, I'm good. Now, it doesn't mean if this level breaks, you have to bail out on everything, but there's a significant technical danger that starts to come into play if the open price from Friday is broken. Now, there's kind of this zone because of the big move that we saw in the jobs report, right? 31.39 is up here. I'll draw kind of this wavy blue line here. but the jobs report came in down here around 3120, and that was kind of the low that we saw. So here's kind of a fairly neutral zone, this 3120 to 3140 area, right? Where, I'd consider this to be just a little more neutral, not overly bullish, not overly bearish. If the market were to break into it, we break below 3120, I think the bears are going to be, largely in charge. But that's what it's going to take. But, first a break of that 3140 is kind of the first warning sign, I think, is what you'd be looking at. And again, all of these are if scenarios, right? If scenarios. They're not this is going to happen scenario. Personally, I do think they will happen, but, it's one of those where I don't have any evidence of it happening here just yet. And maybe some of my personal thinking that'll happen is wanting it to happen because I would like to see a pullback. But at the same time, it's not something that I'm heavily invested in one way or the other. Here for it. So that's what we're looking at from a market standpoint here, and I think those are the two levels to really pay attention to here as we go forward throughout this week. Now the challenge is in all cash. Unfortunately, on Friday, gold pulled back, hit our stop level. Had to move on and out of gold. Hopefully get a chance to get back in. We'll see kind of how the moving averages play out. How it ebbs and flows here. We saw back here in March, April, May, several uptick, 3-7 cross, and then, drop back down, 3-7 cross, drop back down, finally got it and go. Yeah, I think it'll be a similar situation. We'll here we go. Okay, didn't go. All right, next one. I think even a greater chance of going is likely what we'll see, but we'll look to take advantage of it. The next time it goes. Now we did see a lot of 3-7 crossover action to the upside on Friday, a lot of it, but only two stocks managed to trigger. One of them was U.S. Steel. And I did not buy U.S. Steel, and I did not buy the other trigger in Walmart. And both of them, just looking at where the prices were, looking at, how much would have to move, the time decay that would come in, and I just thought, man, I'm overpaying on these on a Friday afternoon. With where the challenge is, I want to be a touch more conservative. And so I decided I'll wait until today and take a look at them. Now, U.S. Steel's up 3% this morning. Having a beautiful morning. I'm not going to chase into it from this point. Just a little too far gone from that risk-reward standpoint. Yes, there is still more upside to come, on it via the algorithm. But it is something where I'm not going to chase into it at this level. The other signal that came in was Walmart. And, this is what I was afraid, U.S. Steel would do. It's what we're seeing Walmart do. And it is, cratering some of the options a little bit, on the stocks where we're seeing this happen. And, Walmart here, the option is pulling back a little bit. I do have until this afternoon to still, get in. The signal is still valid here with Walmart. But I am going to wait until this afternoon. I do want to see, what other signals come on the board here with it. If we look at, any of the upside crossovers that are happening today, we do have a few. FedEx, IBM, Kohl's, Twitter, Caterpillar was on this list just before I got on video. None of them are triggering bullish here. FedEx, IBM do have that potential to trigger bullish here today, so I would like to see how they play out. Kohl's and Twitter have no potential there to trigger, but FedEx, IBM do. Caterpillar probably not, but we'll see how it plays out. On the downside, there weren't any crossovers. Let's see if there are now. Probably not. Comcast, does have a downside. Wow, that's quite an interesting reversal on it here today. So we'll see, if we get some sort of downside downside bear action here on Comcast. Where I stand on, my bullish or bearishness on Comcast. This is one I think has a significant pullback coming. But that doesn't quite matter when it comes to the signals here. So anyway, that's kind of where some of the scans are, where things are, from a market standpoint. From a challenge standpoint, we're just over 2,000 in all cash, and I do want to make sure I have a good signal and a good option value to go with it. One of you asked me this weekend. It brought up a really interesting question, and one I mentioned I talk about just briefly here this morning. But you've heard me comment about the algorithm and the challenge algorithm and how it has performed over the years of development. And one of the time periods I've talked about a few times is simply last year at this time, the November, December time period. I mentioned a lot of whipsaw in it. It was a discouraging time because went into it thinking, man, you know what, I got this nailed. The algorithm, it's working, it's going, live testing, it's doing fantastic. Then we hit this November, December period where it just whipsaws around. And, mostly bearish whipsaws, meaning we get a really nice downside signal and boom, it just, the stock whipsaws strongly to the upside. And even right here in December, we had some nice bearish signals come in, got whipsawed to the upside, and then flush on down. And so, does some of that have me a little, kind of a little more conservative right now? And the answer is no, it doesn't. It doesn't have anything to bear with, what's going on right now. It's a different market environment in terms of volatility, in terms of some of the fears, in terms of the earnings. It's a different environment in terms of the Fed and the economics. So, there's just, other than to say, well, it's November and December, I think that's the only similarity, are the names of the month to what we're seeing right here, right now. So it's not something that comes into play at all. I think right now the risk factor for the challenge, it's not whipsaw. It's what we have seen during the course of this challenge. It is this. It is this part here. It is the Vega and the Theta, which just continue to erode our trades, right? And it's small on a day-to-day basis, but it is added up to the point where I think it's almost $800 in losses are due to the Vega and Theta right now for the challenge. So, that's one of those things where we only really have two trades that have worked, and we have about an $800 cost on the Theta and the Vega. And it tells you how survivable this has been, but that Vega and Theta risk is still very high out there, and one that when I looked at Walmart, I looked at U.S. Steel Friday. It just I don't want to take that risk here with how they are, with what I need to happen. Right, when it came to U.S. Steel, a 2 average true range here move on it. We're looking at about $1.30, right? So need a move up here to about $15.30. Realistic? Yeah, realistic. But also one where, just looking at the option, if the stock were down 20 cents here today, the option would be getting hammered pretty good. And just didn't want to be in that situation here come Monday morning. So we'll kind of assess the signals as they come in here now, and again, we'll go after the high probability and best options, and go from there. And last December and some of the whipsaws, none of that really kind of comes into play with it. It's always a risk, it's always a possibility, but right now it really is a very different market environment. All right. Thanks for hopping on. Have yourselves a fantastic day, and we will talk to you later. Take care.